Brian, where do we start? Let's get into rates. What do we got?
All right. So yeah, we follow the rates. Typically, we're talking about the Mortgage News daily rate. That they do a survey. One of the reasons we use that one is because it does come out every day. But this show, I think we should make note of the Freddie Mac weekly survey, which comes out every week on Thursday. The Freddie Mac weekly survey hit 5.98 on Thursday, and they said on their website it was the first time in 3.5 years that the Freddie Mac weekly survey was below 6%. The Mortgage News Daily also hit 5.99 for a couple days and then went up to 6.0 on their average 30-year fixed. But the article that really struck me was one of the articles said best week for mortgage rates in years. And I kind of like they put a positive spin on it. What we've seen, the 5.99 in the past, not too long ago. But what happened is last time it was very short lived. It was like only for like a couple hours, like on that one day after they made the announcement about Fannie Mae buying a bunch of mortgage backed securities. It dropped down, and then the next news came out, and it shot back up pretty quickly. But the interesting thing about this week is even though it did go back up to 6.0, it wasn't a big spike. And the average rate was actually under 6% for a good portion of the week. So best week for mortgage rates in years.
This is the lowest weekly read. We get those daily reads, obviously, but the Freddie Mac 30-year fixed weekly, 5.98% on Mortgage News Daily. That's the lowest in year, literally since 2022. Really good news. If we look at, this time last year, we were at basically about 6.8. We're now just under 6, according to Mortgage News Daily. If you go back to the beginning of April, we were up over 7% last year. If you go to the mid-May, we were up over 7%. So if you take kind of where we were, high 6s, low 7s last spring, and fast forward to today, interest rates have generally come down a full percentage point, which is meaningful for anyone obviously refinancing from, say, an 8% or 7.5% rate, who have been waiting for this opportunity to refinance. That opportunity is now here. It's also meaningful for home buyers and investors who are making offers in this market. And by the way, this market's going to get way more competitive. I'm talking about our market, so I'm zooming back down here into Connecticut. This snow melts, the competition is going to ramp up considerably. Typically in February, you'll see every single week more and more buyers enter the market. But you're also seeing the smart sellers say, whoa, there's a lot of buyers out here. I'm going to be a first half mover in the spring when you have the least amount of inventory and you get a lot of new listings. Well, new listings are way down. And a lot of people are waiting until the snow melts, but the buyers are still out there. And so when these new listings come onto the market and even more buyers obviously enter the market in March, it's almost like spring is going to be, instead of having like what we call our peak selling season, call it somewhere in February to July 4th. It's going to be contracted now to some time in March when things kind of thaw out, hopefully. And July 4th, it's just going to be condensed, less time, less weekends, higher fever pitch. You're already seeing right now multiple offers on average priced and below average priced and median price and below median priced homes across the state. And Brian, I think you would agree, based on your couple decades of experience writing mortgages for buyers here in Connecticut, that even more buyers naturally enter the market March and April. So the competition on our low inventory is only going up.
I do agree 100%. And one thing that I'm seeing a lot of is people that I pre-approved last year in the summer or the spring, never bought a house. They're calling me now to get their pre-approvals ready. And they're saying, I talked to several people this week that said, the house that I want hasn't shown up yet. but I want to update my pre-approval. And with these lower rates, what we're seeing is, somebody who was pre-approved for 500 last summer or last spring can now go to 550 with a similar monthly payment. So you're going to see more competition on that 550 house when it comes up for sale, because now there's even more buyers that can qualify for that house.
Yeah, usually when buyers have more buying power, they don't say, "Oh, look at that, I'm saving on my monthly mortgage." They go buy a more expensive house. That's traditionally what happens. And so,
For sure.
what do you think is going to happen to prices in Connecticut? Doesn't take a rocket scientist to figure it out.